Hello guys and welcome back to this weekly chat on the markets. If you haven't done it yet, please subscribe to our channel and stay updated on all our new content. Okay, so let's start talking about what happened on the markets this week. As you can see in the chart, some stock indexes are trying to react in a bullish way to that small drawdown of about 5% that occurred recently. This is Nasdaq, and this is mini S&P. On the other hand, bonds are going down. In fact, they've broken through the trading range in which they have been for some time, probably due to spreading rumors of a possible rise in rates, because they've been talking about it for a while in the US. Let's take a look at the energy market. As you can see, all these markets continue their upward race. In particular, crude oil has broken its recent highs. RV is also setting new highs, and here's obviously natural gas, which has reached extremely high levels compared to 3 months ago. So the entire energy market is still very strong. On the other hand, although the metals market has been recovering this week, if you look at its medium long-term trend, you'll see that it's still in a downtrend. The returns of the meats are good. Look, for example, at live cattle and feeder cattle. However, if you look at their trend over the last 3 months, you'll see no significant positive or negative returns, so we can say that the meats are currently sideways. Soft commodities. Okay, we definitely need to mention cotton here, because in the last sessions it literally surged, almost as if it were a cryptocurrency. Finally, here are the cereals. As you see, there are both positive and negative markets. The winner is without a doubt soybean oil, with almost 7% increase in the last 5 days. And let's take a look at the currencies. The euro dollar is still weak and is now approaching 1.15. Finally, it's certainly worth mentioning the performance of Bitcoin, which hit positive 13% this week. And look at that nice breakout it had over the last 5 days. It certainly reached important levels. The price of the future is now $54,000. So let's wait and see if it'll be able to set new historical highs. Let's now talk about volatility. Currently, we're in a particular situation because if you look at the short-term historical volatility of stock indexes, you'll see that the volatility is very high, and it's all at the 100th percentile. Of course, long-term volatility is a bit lower, but in general, we can say that the downtrend that occurred in the markets last week clearly caused a widening in the range of the daily bars. However, the impact on implied volatility, which is the one that somehow measures the fears of the market, is less remarkable. As you can see, the volatility structure of the SPX index is still completely in contango, so it really seems that the recent downtrend didn't cause much fear in the markets. Long-term volatility is the only one that seems to continue rising in a more or less steady way. As you see, all in all, the VIX is at fairly typical values compared to those we've seen in the last 5 to 6 months. So there is still no fear in the markets. And let's take a look at the rollover calendar. Okay, there are no futures to roll over next week. The only one that is close to expiration is crude oil. It'll expire October 20th, and you'll be able to roll it over starting from next Friday. And with that, guys, that's all for today. If you want to understand more about how we trade the markets and how we develop algorithmic systems following the method of the only 4-time world trading champion Andrea Unger, I invite you to watch our free webinar, and you can find that link in the description of this video. Until then, guys, please don't forget to press that subscribe button and that notification bell for all our new content. If you like the video, hey, give us a like. Until next time, goodbye everyone.